Welcome to the Manufacturing Business Outlook Survey press conference call. I'm Danielle Mazzone, Media Relations Representative at the Federal Reserve Bank of Philadelphia, and I am joined by Mike Trebbing, Senior Economic Analyst. Today we're going to be talking about what manufacturing firms had to say about business activity for the month of May, and Mike will start us off with a brief summary of today's report.
Thanks, Danielle. Our regional manufacturing survey's broad diffusion indexes suggest modest growth this month. Indexes for overall activity, new orders, shipments, and employment were all positive, although at low readings, suggesting slow growth. Firms continue to report moderating price pressures. Both prices paid and prices received indexes were negative again this month. And once again, that's the share of firms reporting price reductions was greater than the share reporting price increases. Firms' expectations for the next 6 months remain little changed, but overall optimistic. The future indexes remain below those for most of last year, however. And for our supplemental questions this month, we ask our manufacturing firms about their employment plans for the next year, and we also asked about labor market conditions with respect to the difficulty in finding qualified workers and salary and wage pressures.
So Beth Fitzgerald from NJ Biz, do you have some questions for Mike?
Yeah, hi, Mike. Can you talk a little bit more about what the special question is telling you? You know, one of the things I saw in the special question is that 38.7 are increasing wages to hire people, but only 22.4 are increasing prices. What's going on there, and what are the answers to the special questions telling you about the possibility for inflation, I guess?
Yeah, well, overall, I mean, the first thing is that the majority of firms are expecting to increase employment over the next year, higher percentage than when we asked them about the 6-month horizon. So overall, they're optimistic in terms of manufacturing expansion. And when we asked them about this issue of ability to find qualified job candidates, we did find about a third of the firms claim that they did not have qualified candidates to fill the job vacancies. And then we also asked them about the starting wages and salaries that they were offering to attract new hires, and found about 49% of them were almost a half were indeed raising starting salaries or wages for either most jobs or for selected jobs, presumably the ones where they're having problems filling vacancies. And then we had also a series of questions about whether the problems with filling these positions had become more difficult over the last 12 months. And there, about 3/4 of the firms did indicate that things really hadn't changed that much, but about a fifth of the firms did indicate that they were having a more difficult time retaining employees. And then we followed up those basic questions with the questions about wages and salaries, and there we did discover that that there were firms increasing wages and salaries for either all employees or selected categories, consistent with the other questions. And then we also asked them about whether some of the increase or decrease compensation costs were being passed on in terms of higher prices, and there, a third of the firms did indicate that they were either partially or fully passing on any higher compensation costs to their customers. So we didn't ask them questions about quantitative increases, how much of an increase, et cetera. It's just a survey, so we were just trying to get a good grasp of whether these pressures are widespread or limited in some way. So this gives us a benchmark for asking the questions in the future about whether wage price pressures are building as time goes forward.
But at this point, what does it look like? Do you have a sense of what the impact is?
On prices, on prices, I mean, looking back to the survey that we just published, I mean, in the short run, we're seeing price reductions for purchased inputs and even for the final manufactured goods. And for the 5th consecutive month, we've had more firms reporting price reductions for their own manufactured goods than price increases. So in the short run, we're seeing little pressure on the inflation front, at least, and many of these numbers are consistent with what we're seeing in some of the narrow components of the producer price index, for example, for intermediate and purchased inputs. So some of this is lower energy prices. Some of it's just the slower manufacturing sector right now that's not growing as fast as it had been in the past.
Okay. All right.
Anything else, Beth?
No, that's good.
Well, thank you for calling in, and June's survey will be released at 10 a.m. Eastern Time on Thursday, June 18th.